and gentlemen, welcome to Unisys Weekly Fundamental Analysis. All right, let us recall news for last week and continue to follow up on the fundamental analysis. So first of all, we'll look into the US dollar. So investors were skeptical of the US fiscal stimulus deal. Okay, it's because the US dollar is still generally falling against other currencies, literally without any support, and the US dollar index fell 0.21% to 92.74 and fell 0.3% during the intraday session and fell 1.03% in a week. Okay, it's because the Speaker of the US House of Representatives, Pelosi, said that it is only possible to reach a new round of COVID-19 aid plan agreement before November 3rd, which is the general election, but Trump must have the support of the Republicans to reach an agreement. And Trump, as well as the Treasury Secretary, also rebuked it on Friday, saying that Pelosi must make concessions to reach a final agreement. Okay, the Republicans and the Democrats still have major differences on this issue. All right, so the Larry Kudlow, the chairman of the White House National Economic Council, also said that the negotiation of the plan is not progressing quickly and it's very difficult to reach an agreement on the aid plan before the election. So next, we'll look at the Standard Chartered Bank said that once Biden is elected as the president of the US, the dollar will continue to fall sharply. And why? The US Treasury Secretary faces the risk of double deficits in the trade sector, which is a huge test for the US dollar index. Then the market has digested that Biden's victory, and it is expected that to release the economic stimulus plan at the end of this year. I also said last week that no matter who wins, there will be an economic stimulus plan released. Okay, as a result, risk appetite prevailed this week, and market expectation for both stimulus measures were high, which puts the dollar at a disadvantage. Okay, so next we'll look at the GBP. Okay, the pound fell 0.33% to 1.3040. All right, against the US dollar. Okay, however, despite the turbulence of the pound over the past few days, it has risen by 0.97% in a week. According to media reports, France is preparing to compromise on fisheries to help the EU reach a Brexit agreement with the UK. So the pound initially rose after the report was issued and then gave up the gains, highlighting the overall risk to the pound posed by developments surrounding Brexit. So mainly we have to watch on next week's announcement, which is the third quarter GDP data of the US will be released on Thursday. Okay, the National Bank of Canada, also stated that one of the reports may show the largest quarterly expansion in history as the economy restarted after the second quarter prosperity severely restricted activities. Overall, USD is still weak and GBP won't have a proper direction as long as the negotiation still haven't come to an end. All right. Then next we'll look at the forex calendar that we have to notice, that we have to pay attention, which is from the next Monday to Thursday. All right. The Monday we have to notice the Japanese government convenes an interim Congress, the 5th plenary session of the 19th China. And for Tuesday, US durable goods orders, China's industrial profit data. For Wednesday, two major inventory reports. The Bank of Canada announced interest rate resolutions. Thursday, which is the most important, which is the US GDP, Japan and European Central Bank interest rate decisions. Alright, so that's all for today. Thanks for watching.